All right, guys, today is Wednesday, May 31st, and we're going to take a look at the Euro USD and how it's been performing over the last week and a half. So the video I made last time, the analysis video I made last time on the Euro USD, I think we were all the way up here, around the 1.0800s. And I actually made a video last week on a Wednesday. For whatever reason, it didn't, the recording didn't come out properly. Like the screen was blank. So I was in a rush. So I wasn't able to re-record the video and the analysis. But that's perfectly fine considering that the market was still making a move. And then, give it time to develop and then analyze what the market's doing. So right now, today was pretty interesting. We had such a massive move here on the Euro USD. I mean, I think it was down about 0.92 at most. It was definitely down almost 1% at one point. And you can see this, if I zoom in on this candle, you can see a really big retracement all the way back here, even though the candle still uh, ended up pretty bearish. But this is a pretty strong pullback, and I have my own reasons why I think this happened. But nonetheless, I'm still looking for this level that I've been talking about since we were all the way back here at 1.0892, I believe, all the way up here. And so right now, collectively, not one solid position. I have multiple short positions to the downside, targeting 1.06. But collectively, the positions are right now are about just slightly over 600 pips. Again, collectively across 5 positions that I've been adding to the short side. So let's just get into it. Let's retrace a little bit to using the replay tool all the way back here. Now, once we were in this level, this is where I started putting shorts in, right at this candle. So the first target I was looking at is this long-term median levels. If you guys have seen my analysis, you kind of familiar with the median levels that I talk about. So this is a long-term median level. This up here is a short-term median level. So I wanted to see what the market was going to do over here once we got to this long-term median level, which is about 1.077. And I felt that if the market was going to go lower than this, or if the market was going to come down here, it would have to show me that it was going to be continue on. I still expected some type of support in this zone. And then I was deciding if I wanted to add shorts or just leave it, as is and see what the market's going to do, or maybe even get out entirely on my short positions. So going forward, of course, we made this big down move, and like I just mentioned, I was looking for some type of support to come in here. Some type of price action stall, right? The market's not going to go down and make a complete down move just nonstop. It's going to make some adjustments and consolidate or pull back or whatever the case is. So of course, here we go. We had this nice pullback, and then the market started heading up slightly higher. But once I started seeing these wicks up top, I started feeling that the market was still pretty weak. So I think I added some more short positions here. But I was paying attention to this trend line that I'll draw right now using my trend line tool, my support and resistance trend line tool, using this resistance to this support. So I was expecting for the market to still come down, at least hit this trend line before it was going to find some type of strong bounce, right? So we'll continue down. You can see, of course, that was a good sign that the market came down and started testing that long-term median level again. And then once it started coming down, you can see it started testing this trend line. That's one support level here. And it came down to test it again. Once it started doing this, where it's like having a long wick below and a long wick above, I started, wondering if this market's going to make a turnaround to at least pull back into this median level before continuing down to the downside. And of course, finally found support here, and then it pretty much pummeled through. But price still closed above this trend line. And now, does that mean that, this is bullish? Considering how much it exceeded this trend line, that tells me that the market's still pretty weak. So I'm still expecting for a continuation to the downside. And you can see this is actually a live chart now of, eventually breaking through this and getting down to this support level over here, which is the median level. You can see support all the way back here, even in the beginning of the year. So I'm still expecting for this for the euro to get down here into 1.06 and 1.0550. Somewhere in this zone is where I'm looking to take profit. Now, a couple of things I'm looking at. If I take again my support and resistance tool, and again I do the same process of resistance to support, I want to see what happens here. Now, this resistance, this support, the market already came down in March and found strong support here before making a big run over this long-term median level and then continue on to that uh, long-term median level. And this is pretty interesting because on the longer term price action that I see, like on a 3-month chart or on a monthly chart, overall it's still pretty bullish. Like if I zoom out, this is still an overall uptrend. So bottoming out over here, making this push to the upside, coming back down to test that pivotal zone support, and then rallying on to that median level. Now we're coming back. It seems like we're going to try to test this again. We have to give it some time. The market takes some time, and that's one of the key things when it comes to trading is that you have to be patient if you want to, be successful, at least when it comes to swing trading. And the market's going to take its time, but at the end of the day, it's worth it if if price is reaching your target. So I want to see what happens here on this in this zone right here. If we ended up coming down and testing this, and we can even adjust this, I always like to. The market's always evolving, right? So with price action, you still have to progress with the market. One trend line, one pattern, or divergence, or whatever the case is, you always have to develop with the market. So in this case, even if I adjusted this to this ultimate low, right, that's still right around this level. If we break below this, that's going to be interesting to see what's going to happen. Is it going to open up the floor for a run all the way down here? Or are we going to get some type of support here and then rally up to maybe this median level, or maybe even make another run to the upside? So that's remains to be seen. I don't want to be greedy and try to assume that we're going to make this break. So I want to see what happens in this level right over here. And I'm planning on exiting all my short positions at 1.06, even though the market might go a little lower, but we'll have to see what happens in this zone. Now, another reason why I want to, even though deep down I want to hold my short positions, this looks like a support zone, okay, with this with this pivotal zone and this trend line. But another thing I'm paying attention to, if we look below here, it looks like there's hidden divergence developing on the MACD and the RSI. Now, if you guys don't know what hidden divergence is, basically when the market either makes a higher low or an equal low, and the MACD or the RSI makes an obvious lower low, if that makes sense, right? So I could draw that right now really quick using my divergence tool. And if I draw this trend line out, you can see basically this low has not been exceeded yet. And the MACD is pretty much making a slightly lower low already. And if we ended up coming down here, I'm assuming that this is going to be much lower. And that also could be a sign of a hidden divergence, or what I like to call a trend continuation divergence. So yeah, that's what I'm looking for. Going to see if this level holds up. Again, there's no nothing's a 100% guaranteed. So if the market somehow miraculously turns around and ends up rallying, I'm ready to get out of all long short positions. But if not, I'm looking to target this zone and to see what happens, if this is going to be a buying opportunity, or if we crack below this, it's going to be a selling opportunity. And if we do break below this, then I'm looking to target all the way down here around 1.01. But again, that's neither here nor there, because we have to wait and see what the market is trying to do, right? Remember, I always talk about, even if you want to predict where the market's going to go, you may be right in the direction, but you don't know how it's going to get there. It might fluctuate, for a few days, or it might try to fake you out a few times. Like, this is one of the best examples, all the way back here. Okay. If, let me just get rid of this trend line real quick. But let's say you bought back here and you were targeting maybe this median level right over here, which is, it's coupled with this support here. Or even if you were looking for a longer term perspective and looking at this level all the way up here. Okay. If you went long, you can see the market starts showing you that you're confident in your trade, right, in your long position. And look what happens. Now, the market is designed, from my own experience, and if you guys don't know, I've been trading now for almost 15 years. So I've made all the mistakes. I've made all the trial and error that you're probably going through, or that you have experienced. I've been there myself. So I know that the market's always trying to either scare you out, the market's looking to take greedy traders out and prematurely, uh, you know, stop you out, or if you move your stop too early, it plays. It's a big psychological game when it comes to the market, right? So you have to be prepared for that, understand what you're looking at, and what you're, evaluate your position. So again, let's say you bought here and you move your stop loss up, or even if you added positions up here, look what the market does. It comes all the way back down and it scares you out, or it makes you overthink in some cases, right? But again, market starts rallying to the upside and you say, okay, this looks good. I'm going to stick to my long positions and I'm going to add even more, because from a short term time frame, you might think this is a double bottom, and even on the daily chart, it looks like a double bottom, right? So now you really have confidence in the trade, right? So you start adding positions and you're like, oh, this is great, but look what happens. Okay, again, even if you are right on the direction of the market, you don't know how it's going to get there, and that's a hard lesson that I had to learn for many, many, many years. Is that, again, this is what kills traders that over leverage, because you start adding all these positions and the market, you don't know what it's going to do, right? Again, for the upteenth time, you may be right in the direction, but you don't know how the market's going to get there. Okay, so you always want to keep that in mind when you're trading. And of course, the market finally does make that move, but not without this whole little fluctuation here. Okay, so that's a little lesson there, when it comes to trading, and I hope it helped you out. And also, if you guys want to check out, if you're viewing this on TradingView, I also have a post where I'm describing, or I wrote a guide called "The 7 Reasons Why Forex Traders Crush the Competition." Or if you're viewing this on YouTube, I have it down in the description, a link where you can check that out and you can download, and it's absolutely free. You can check that out. I wrote it myself a couple of months ago, and I feel like it has a lot of value and it can really help you out. So with that said, that's gonna wrap up this analysis. I want to see what's gonna happen tomorrow. Basically, if we're gonna continue to the downside, if we're gonna break this trend line, or if we're gonna get some type of pullback. But again, 1.06 would be the target. That would be about, I think, about 700 pips. So over 700 pips collectively, altogether, with this short positions that I'm in. And that's going to be it. Hopefully you found value in this in this analysis. And if you would like, get in contact with me. You can always check out internaltrader.com, and you can just check out a couple of things there. I'm more than welcome to to respond to any request or any contact. You guys reach out to me, right? So that'll be it. We'll see what happens going forward. And like I always say, trade safe, trade responsibly. And one of the top rules, if I had to give one rule of advice, is to protect your capital at all times, right? Because without that, uh, without any ammo, financial ammo, you can't get involved in the markets and take advantage of the big opportunities that present themselves in the market. So with that said, guys, take care. I hope you found this valuable again, and I'll see you in the next video. If you would like to get in contact with me, you can head over to internaltrader.com. You can fill out the newsletter if you'd like, or if you would like to get direct coaching from me, you can head over to internaltrader.com/VIP coaching. You can book a free 30-minute call with me, and I can describe all the things here in the webpage and offer you some insight and guidance on if this program is suitable for you. So please reach out if you would like to get help on your trading, specifically Forex swing trading, and I will be more than happy to help you out. Good luck.